Hello class, this is Dr. Fenton. In this video, I'm going to show you how to complete problem P1-22A, which is a homework problem in the back of your chapter, and also is a Connect homework problem. So in this one, they give us transactions for year number 1, and it says all inventory was started and completed during the year, and they give us transactions. We are asked to prepare an income statement and a balance sheet. Now you can see the answers here, and they have the explanation down here below. So I'm going to take you through these numbers and show you how to get all these answers here. What I've done is, in an Excel spreadsheet, I've already typed a lot of this information in. I'll plug in the numbers to show you how to compute the numbers you need for both the income statement and the balance sheet. Let's go back to here. Now, let's go through the transactions one by one. Acquired $4,200 cash by issuing common stock. Now you should remember from the first course that issuing common stock does not have anything to do with the income statement. And so you're going to see that the $4,200 cash for common stock ends up right here in common stock $4,200. Okay? Now the next several we deal with items related to the income statement. Now in Chapter 1, you should pick up that there are 3 main cost areas for production. There are materials, labor, and overhead. And that's also called like direct materials, direct labor, and manufacturing overhead. It means the same thing. So I might say direct materials sometime. I might just say materials sometime. It means the same thing. Now, if you paid $720 for materials, we need to put that in a schedule. This is one I worked up. This is one you really should do on paper as you work this problem. So we'll put $720 here, and you can see some of these others sales start to fill in because I have this all linked and coordinated. So let's just take it one at a time. The next thing we need is labor. Let's go back and pick up labor. $19.90. Let's plug that in. There we go. And let's pick up overhead. Here's overhead. And the way this is worded, it's $1,385 rental fee for production equipment. So you're using the equipment for manufacturing, for production. So we're going to use this as overhead. Now you also saw in Chapter 1 there's a lot of other items that go into overhead, but this is just a simple, straightforward problem. So this is the only overhead item we have in this problem, even though we'll see in other problems you have a lot more items that are considered overhead. So $1,385, drop that in here. Okay. We now have the total manufacturing cost right here, $4,095. Now let's just take number 5, paid $80 to administrative employees. That is not a production cost. That is an administrative expense. Also paid $117 rental fee for administrative office equipment, another administrative expense. What we'll do is add 5 and 6, so $80 plus $117. That's where you get the $197 for administrative expense. Okay, so $80 plus $117. Go straight to the income statement. That is not a production cost, and so it's $197. Okay. So that's the only number we've taken so far to the income statement. Even though you see all these others here, this is the only one we've identified so far. Now we produced 390 units, of which 290 were sold at a price of $13 each. Okay. Now let's take the 390 that we produced. Go to the Excel spreadsheet. We produced 390 units, and what I've done is show you that the cost per unit will equal the total manufacturing cost, what we have right here, divided by total units produced. Well, I misspelled that word. Let me see if I can correct that right now. There, that looks better. Okay. So the 4,090 divided by 390 is $10.50 per unit. Let me go back to the information here. Then it says we sold 290 of these 390. So of the 390 we produced, We sold 290. That means there are 100 units we did not sell. Okay, and that'll stay in your ending inventory for finished goods inventory. So we've already used the 390. We use that total units produced divided into total manufacturing cost to get our cost per unit. Now let's use the cost per unit down here and take that times units sold, and that's going to give us the cost of goods sold. So going back, we have 290 sold. Drop that in right here. Put a place for it right there. 290 units sold. That drops in. So we now take 290 units times $10.50 per unit, cost per unit. And so we have cost of goods sold of $3,045. Now it's $3,045 then will go into the income statement right here. $3,045. Let's get sales revenue. Okay, what I did is pause the video and filled in some information in Excel here about the selling price and the sales revenue. So let's go back and take a look at that again. We sold 290 units for $13 each. So we need to get the sales revenue of $37.70. So units sold, this will be the units, 290. Selling price per unit is $13. Okay. So sales revenue is equal to units sold times selling price per unit. So 290 times 13, or 3,770. So 3,770 goes right here as sales revenue. We already found cost of goods sold. Let me show you that one more time on the spreadsheet. Here's cost of goods sold. What you do then is subtract to get gross margin. So 3770 minus 3045 gives gross margin 725. We've already shown how to get the administrative expense, 197. Subtract, and so net income is 528. Now your numbers will be different. Everything else, all the wording will be the same, but your numbers will be different. Let me review this one more time for the income statement information. We had to come in here and add materials, labor, and overhead to get the total. You use total manufacturing cost and divide that by total units produced to get the per unit cost. This is our cost per unit. So it cost us $10.50, and look, we're selling it for $13 each. So we're selling it for more than it cost us. The cost of goods sold for these 290 units that we sold will be the 290 units times the cost per unit, or $3,045, and the sales revenue will be the units sold times the selling price, $13, $3,770. So that's the income statement. Now the balance sheet. Now the cash balance in the balance sheet, $36.78. Let's see how we get it. Now look and see which one of these are cash items. Well, you sold common stock, that's cash coming in. You paid materials, labor, overhead. You paid the employees. You paid the rent for the office equipment. And then we sold some inventory for cash, $13 each. So 1 through 7 all deal with cash. Let's add all this back up in the Excel sheet. All right, sold common stock, $4,200. Paid materials, you can see materials, labor, overhead here. So let's put this in, $720. Oh, we need to put this in as a minus sign. So minus $720. Cash going out for labor, minus $19.90. For overhead, minus $13.85. We paid employees $80, and the rental fee for the administrative office equipment was $117. So 80 and 117 come back out, minus 80, minus 117. And sales revenue, we can see, was $37.70. It was all in cash, so that's a plus $37.70. So that's how we get the $36.78. The cash came in, sold common stock, had revenue. All the other items were cash going out the door, cash payments. That's how we get the cash balance. So the finished goods inventory amount in the balance sheet will be the cost of the units we did not sell. So 100 units times $10.50 per unit will equal $1,050. So the cost, again, the cost per unit times the units we did not sell. Common stock, there's the 4,200. Retained earnings equals net income, which is 528. This is the first year of operation. We did not pay any dividends, so net income is added to retained earnings to go from 0 to 528. And there's your balance sheet. So that's it. Hope this was helpful, and good luck with your studies.